Hey everyone, Brian with Stonebridge Insurance. Just wanted to come to you again with a video to talk to you a little bit about a question that I get on a pretty frequent basis when we're talking about homeowners insurance with clients, and that's the difference between replacement cost and actual cash value. There's a lot of horror stories that people have heard about their home not being covered at replacement cost or having to deal with actual cash value. And so I thought it would be good to just take a minute to talk about the difference between the two, so you know when you take the time to go through your policy, if you don't know yet, kind of what you're looking for. So replacement cost on your home, and you can have replacement cost on the dwelling itself or your home, the structure. You can also have replacement costs on your personal property, the stuff that's inside your house, clothes, furniture, appliances, electronics, those types of things. So replacement cost basically says, here in Nebraska we have a lot of hail. So if a hailstorm comes through and you need a new roof, the insurance company is going to pay for a new roof minus your deductible to pay for that damage. That's replacement cost. It's not going to take into account that the roof is maybe 5 years old or 10 years old. It's not going to take into account for wear that may be on there from maybe a smaller hailstorm that went through that caused a little bit of damage. It's just, we're going to replace your roof. And the same goes with personal property. If let's say you have a fire in the house and there's some smoke damage, maybe some of the furniture needs to be replaced. If you have replacement cost coverage on your personal property, the insurance company won't pay you for your 5-year-old couch or your 10-year-old chair. They're gonna buy you a new one, a new couch or a new chair. They're not going to take into account how old it is. So replacement cost coverage, that kind of gives you a definition of that. Actual cash value deals with depreciation. And so if you have a policy where your home is insured for actual cash value, and it may be some policies have actual cash value for the roof only, but actual cash value takes into account depreciation. So let's say that hailstorm comes through again, you need a new roof, but your roof is, let's say, 10 years old. The insurance company is going to take into account the age of the roof, any depreciation that it may have on it from wear and tear or other storms that have went through. So for instance, if it takes $10,000 to replace your roof, for easy math, minus your $1,000 deductible, that leaves you $9,000, but the roof is 10 years old. So the insurance company may only pay you $4,000 for your roof, and you're on the hook for the rest. So replacement cost, that's definitely the way to go if you can. Our agency does not write a whole lot of actual cash value. In fact, very, very few policies, because when it comes time for a claim, usually people aren't happy with the amount that they're getting paid because of depreciation. So replacement cost, actual cash value, you want to make sure that you have replacement cost on your policy. That's what people, when we write policies, we're making sure that we've got replacement cost coverage for them and they're properly protected. So if you have questions about your policy or you haven't looked through it in a while and you want to just sit down with us and see if there's some opinions or advice that we could offer, give us a call. Again, my name is Brian Blakely with Stonebridge Insurance. Have a great day, everyone.